What's up, everyone? Dylan here. I wanted to hop on to do another episode of the weekly analysis video. I'm a little sick, so please bear with me. But with that said, we'll hop right into it. Last week's price action was insane. The volatility was absolutely crazy. It was the worst week for U.S. stocks and world stocks, right, on a global basis since March 2020 COVID lockdown collapse. It was it was worse than the worst case scenario, as Dan Ives put it. But let's talk about what happened. Okay, what was the inflection point? The inflection point was April 2nd on Liberation Day. As I noted that it was going to be very, very important. Right, I wanted to talk about a key trend line that hit on Liberation Day, right after Trump started to speak. So I said NASDAQ at trendline, key spot to gauge as it is the weaker index. And this brings up a good learning lesson, as I will explain in a second. So as you could see, there was a trend line from February 21st is when it was established, and it hit again on March 25th. And that's exactly where price rallied up to on April 2nd, Liberation Day. Okay, and the learning lesson here is something that helps me gauge price action around key areas is by looking at which index, right, between the S&P and the NASDAQ is stronger or weaker. How do I figure out which one's stronger or weaker? I just look at the performance over the last, say, week, the last month, right? You could see over the last week, NASDAQ is down 12.28%, whereas the S&P is down 11%, right? Same deal on a month, right? Over the last month, NASDAQ is down 14.88%, whereas S&P is down 12.57%. So those are two examples of, that back up why the NASDAQ is weaker, okay? So when the weaker index is coming up to a resistance area, it should fail there, okay? And then the reverse engineer is when it comes to support areas, the stronger index should bounce at support, okay? So if they don't, right, if the weaker index is able to withstand an area of resistance, that is a good sign that the overall market is resilient and that higher prices should be visited soon, okay? So again, that's a little bit of a learning lesson before we get into this crazy drop that has, that we have seen over the last few days since Wednesday, right? So the NASDAQ and the Russell 2000 indices are both in bear market territory, which by definition means they've both declined more than 20% from their peak, right? So we'll go to the Russell index. You could see from highs to now it has surpassed that 20% drawdown, and same deal with the NASDAQ as well. Okay, you could see NASDAQ and the S&P have been breaching areas of support like butter, right? They haven't been bouncing at key areas of support, which clearly show that they are very, very weak. Okay, a lot of people have been comparing this move to the COVID crash and the '08 financial crisis, okay? Those were uncontrollable, whereas this one technically is controllable. And let me explain. This is from Tom Essay. I read this the other day and I said, wow, I want to definitely include that in my video. So this is from Tom Essay. The Trump put still exists. This current market calamity is very different from the two recent ones, which were the pandemic and the financial crisis, in that it's manufactured by the government policy. President Trump initiated these tariffs with the stroke of a pen, and he can reverse them with that same pen or via a post on Truth Social. This is not some existential crisis that we can't solve, and if it's a policy error, it can be corrected. To that point, the Trump put still exists, although it may be lurking when or with the S&P 500 down 20 to 25% year to date. Not a great outcome, but still it exists. Okay, so again, this one is controllable, but it's going to be very, very reliant on Trump's policy change. And we'll get into that in a second. Okay. Another comparison that people have been using is the fear and greed index, which is at 4, which is a crazy, crazy extreme level. Usually when the fear and greed index hits extreme levels, both fear and greed, it tends to mark a market inflection point where the sentiment changes. Okay, we have not seen that. As you can see, a month ago it was 11, a week ago it was 21, and now it's 7. So it has been in the extreme greed or extreme fear territory for a while now, and the market continues to sell off and sell off and sell off. However, the last 2 times that it was this low was September of 2008, right, during the financial crisis, and March of 2020 during COVID-19 pandemic. Okay, so I do understand that people are comparing it to those 2 events, but again, this one's technically controllable and can pivot in a blink of an eye. Okay, whereas the other 2 were uncontrollable and needed a lot more different moving pieces to occur before it was able to bottom. So that brings me to here. So Subu Trade has posted, I'm going to show you 4 different diagrams that he has posted over the last few days that show different metrics in the market. And historically speaking, when these metrics occur, what tends to happen in the next, 1 day, 1 week, 1 month, so on and so forth. So let's get into the first one quick. All right, 45% of S&P 500 stocks are now oversold, which is quantified as the RSI being below 30. This is uncommon. Here's what the S&P did next. So you can see 1 day later, the average is very small gain. 1 week later, the average is 1.43% higher, and it's an 82% positive expectancy rate. Okay, and then as you can see, 2 weeks later, it starts to go down in terms of probability. But 1 week later, 82% of the time, it is higher by 1.43%. Right? VIX reached 45. This was on Friday. Here's every time this happened in the past and what the S&P 500 did over the next few days. Again, 1 day later, 2.57% increase in value, and the positive probability rate, or I should say, is 75%. 2 days later, 1.75%, 83% probability, right? You go all the way to 1 week and 2 weeks later, the probability is still very, very high, and you can see that the market tends to bounce in a pretty solid manner going forward, right? Today could be the second day in a row where the S&P 500 fell more than 4.5%. This has only happened during some of the worst crashes before, right? So, again, right, you could read it yourself, save my sick voice a little bit, right? Feel free to pause, and then we could go here. 71% of S&P 500 stocks have crashed below their lower Bollinger Band. Here's every time this happened. Again, pause the video if you like, but you get the idea, right? So, clearly, what am I trying to say? It is very, very, very likely that a near-term bounce is approaching, okay? I'm going to look at the VIX because we just went over that via Subu Trade, but you could see back in August when you had that yen carry trade unwind, you had a massive capitulation move, right? Capitulation, right? A lot of margin calls being dealt, a lot of panic selling at the lows, right? This is something you want to see before you really, really start to get confident with a bottom, okay? So far, we technically haven't seen that massive panic. Yes, the VIX hit 45 on Friday, right? But you haven't seen a really, really big tail involved where you have that massive capitulation at that, at the lows where you're seeing margin calls and so on and so forth, right? That's what you really, really want to see going forward, and that's what I will be looking at going forward to really give me a good idea of when the true bottom is, likely per se. Okay, and like I said, we have not been seeing that, and it's interesting that the VIX, the normal VIX and the VIX futures have not seen that large move, because you had the VIX one day, which is literally the volatility index day by day, hit all-time highs. So since inception, which was back in 2023, this thing literally hit all-time highs on Friday. Okay, so you definitely want to see this type of move, or a long tail, start to show itself in the VIX itself, either VIX or VIX futures. Okay, and so far, this move in the VIX has been somewhat orderly. So you want to see that massive tail start to produce itself, and that should mark a near-term, or not even near-term, but medium-term bottom. Okay, so this is from Adam Crisafulli. I agree with this. He said the velocity of the recent slump is unsustainable, and so it wouldn't be shocking to see a rebound, perhaps even a violent one. But we're still of the view that rallies should be viewed as opportunities to sell, as it remains extremely difficult to articulate a fundamentally bullish view on stocks. Okay, so let's say that we do get the bounce, which again is very, very, very likely, as per Dylan O'Neill, as per Subu Trade, as per Adam Crisafulli, right? I don't want to put words in their mouth, but that is the vibe that I have gotten from those two, and I will stand on my own opinion that I do believe that a near-term bounce is very, very, very likely over the next few days, okay? And I will position myself for that, okay? So the big uncertainty is if and when this bounce occurs, right? If Dylan O'Neill is correct in that a bounce will occur over the next few days, right? Will it sustain is the bigger question. And Trump's policy will dictate whether the bounce has legs, right? AKA continuation, or if it rolls over, as every other bounce has basically since late February. Okay, so you have to definitely keep an eye on his policy and how other countries start to whether they strike back or they start to come up with deals. Okay, that's what's going to dictate whether the next bounce has the ability to run or if it's going to be short-lived. Okay, so, and this can happen in a blink of an eye, right? Just like the Russell, right? We go to the Russell. The Russell was 4 points away from hitting the halt point, right? The circuit breaker, right? Circuit breaker occurs on the equity indices if they move 7% lower in a single day. The Russell was 4 points away from hitting the circuit breaker when Trump came out and say that he had a productive call with Vietnam, right? Vietnam wants to cut their tariffs down to zero if they're able to make an agreement with the United States, right? So in a blink of an eye, the Russell went from almost getting down to circuit breaker, right? It was leading the downside move. It was the weakest one out of the 4 indices, right? S&P, NASDAQ, Dow Jones, and the Russell. It was the closest to hitting the circuit breaker. Everyone least expected it to rally, and that's exactly when it rallied. And you could assume and argue that, oh, they knew that it was going to hit the circuit breaker, so they came out with that news, when they did. And, I don't know, right? That's a theory. It could be true. I don't know. But all I'm trying to say is these things can happen when you least expect it to. So when that news came out, again, it was at lows, and like that, blink of an eye, it freaking rallied 4% in a half hour. Insane. Okay, so it's very, very difficult to time these moves. However, it is possible if you do it correctly. What do I mean by that? Have a general area, right, that you want to kind of accumulate into. Don't expect to nail the actual bottom to the exact minute, to the exact second, to the exact 30-minute window, right? It's going to be very, very difficult, and you're gonna have a lot of losses. And by the time you do manage to catch it, you're gonna lose a ton of money in the process. Okay, so don't expect to nail the bottom perfectly. Okay, expect to be wrong. Expect to to not be perfect. You have to obey by your stop loss. You have to obey by your trade management, risk management systems, so on and so forth. So by no means do I think that I'm going to time it perfectly, but when I do have the metrics and the key areas that all come together, I will strike, I will put money behind the table, and I will give it some cushion so that if I am wrong with the timing, it still has the chance to work out in my favor. Okay? So again, these things, these policy changes, because a lot of different countries are involved, are going to happen in a blink of an eye, right? It's going to be very, very, very difficult to predict, okay? So unlike Vietnam, who is coming back to the U.S. to try to agree to something, China has retaliated with a 34% tariff, and the EU also it was preparing further measures to tariff U.S. goods as well. Okay, so in plain English, we don't know where this escalation will end. Okay, but we don't need to know when the escalation will end to profit off this market. Okay, but again, you cannot be perfect. You have to accept being wrong from time to time. Right? For me, my win rate, my win percentage is not too far over 50%. Okay. However, it's how I manage my trades that make me money, right? My management, my trade management, my risk management are very, 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 disciplined and very, very solid and systematic. Okay. That's what makes me money, over time, right? The longevity, my profit P&L curve is generated because of my managerial side of things, right? Because of my discipline when it comes to the management side. It's not because I could nail market tops and market bottoms flawlessly and precisely. No, it doesn't work like that, okay? So there are theories that the U.S. government is purposely crashing the market to reduce the yield on U.S. treasuries so that they can refinance their debt at lower yields and save on interest expenditure. Basically, this massive sell-off in the stock market incentivizes investors to move their money to the bond market, which causes yields to drop. And if that theory is true, right, then it's somewhat working, right? The 10-year yield since mid-January, right, so over the last, call it 2-3 months, has dropped almost a full percentage point, right? In mid-January, it was at 4.81%, and now it's trading all the way down to 4%. And it got as low as, what was this low on Friday? It got as low as 3.89%. So, a full percentage point on trillions and trillions of dollars is a big, big deal. So if that theory is correct, who knows? But basically, if that theory is correct, then Trump wants to get interest rates lower, which he has been very, very vocal about. But the uncertainty is, when is enough, right? When will he be content with where rates are, right? Is under 4 okay? Excuse me. Does he want rates to go closer to where they were in September, right? Where, 3.6%, right? I don't know. Bear with me. Okay. So, price action going forward. if the bounce does occur, right? The bounce that is very, very likely in the near term. If it does occur, this area here is going to be very, very important to watch price action at. Excuse me. Sorry. I apologize. I'm trying my best for you guys. So if the bounce occurs, this area on the NASDAQ, as it is the weaker index, remember what I said in the beginning of this video, because it is the weaker index, that is going to be the key area to watch going forward. Excuse me. Okay, I apologize. If we do get the bounce, that is where it could fail and reverse its course. Okay? However, if it manages to break above there, that will be a good sign of resilience in the market as the weaker index is able to sustain value above a resistance area, right? Key support, it was previous support, now it could turn into resistance. As for the S&P, this is the key area that I would look at going forward if this gets worse. I will be using 2020. Let me just... All right. There's a minute left of this video. I'm going to get it done. This is where I will be looking at going forward. Stem lines, the trend line stemming from the COVID-19 lows of 2020. This is SPX. You attach it to this low here, right? That marked the October 2022 lows. That brings us down here, which also aligns with this high over here. Okay, the high of January of 2022. Okay, so this area is going to be the key area going forward if this drop continues down to that 4,800 handle on the SPX. Okay, and like Tom Essay said, right, with the Trump put, he said the Trump put still exists, although it may be lurking with the S&P down 20% or 25% year to date. Where does this line up with? You guessed it, 21.5%, which falls in line with what Tom Essay believes. Okay, so very important. That's what I expect, right? To the upside, you want to look at that NASDAQ. Previous support now could be resistance. Use that to gauge price action if it manages to bounce. If it doesn't manage to bounce and it starts to go lower still, the next macro level would be that 4,800 down to that trend line stemming from 2020 lows, okay? That is it for me. I'm going to go ahead and cough more. And if you guys enjoyed this video, please give it a thumbs up. Like I said, I apologize for being sick, or not for being sick, but for coughing like that. And I tried my best to come on here at a time that it's very, very important and very, very volatile, and people are struggling to navigate their way. Hopefully this is helpful. Peace.